This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Thursday, July 9th, and this is the AgYield War Room. Dan Dempsey will be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here at September corn down 4 1/4 at 430 3/4. August soybeans are down 8 1/4 at 11.85, and September Chicago wheat is down a penny and a quarter at 606 1/2. This morning we had an export sales announcement, a couple of them actually, 136,000 metric tons of soybeans to China. That was for new crop 26. Also announced 120,000 metric tons of soybeans. These are to unknown destinations also for 26. We got weekly export sales here this morning. Nothing real special across the board. Corn, 565,800 on the old crop. That's below the low end of the range. 401,700 on the new crop. That was sharply below the lower end. They were looking for 600 on the low end of the range there. Soybean side, 54,300 on the old crop. And the new crop, 408,300, which was in line with estimates, but nothing to write home about there. On the wheat side, 313,100, lower end of the range. Meal, 225,500 on the old crop. 96,000 on the new crop. We sold 900 old crop oil, nothing on the new crop. Good morning, fellas. We're talking before the show, our favorite time of year here where we argue about weather models and everybody's interpretation of said models. But at the end of the day, corn continues to struggle here. We got continued bombing overnight in Iran. Things are ratcheting up pretty good over there. So interesting to see. Crude's pretty muted here this morning. However, we're back. We're above $70, but down 54 cents currently here. So still not a runaway crude market given everything that we've got going on over there. Poor sales report, Dustin. I guess what's on your mind this morning as we start off, and then we'll throw around the room.
Yeah, Dan. I think we had, let's go to the chart, Jack, actually, the December corn chart. So, to start this week, we had the biggest 2-day rally of the contract for December 26 corn. It was a 5.1% rally and 22 cents. So it's amazing. You go back to the entire history of that entire contract, and we didn't have that large of a rally the entire time over 2 days. And it was very quick, very abrupt, just like the sell-off was. And so the question is, this is as of Tuesday's close that we had that rally. We'll get on Friday, we'll get the commitment of traders report and see, who was really behind that, who was buying out. I'm guessing that it was a fairly significant portion of the managed money shorts, but we'll have to see. The blue line right there in this chart represents the 50% retracement level from the contract high to the recent contract low. So it made a pretty good technical move. And we've, like Jason mentioned yesterday, a lot of people are saying, hey, sell this first rally, right? They don't last long. And that may end up being correct. And it is true that we are moving away from insurance protection levels for those with ECO and that are experiencing good weather. So there's a lot of reasons that we may be finding more pressure and more selling here. Me personally, I don't see, the big change. We were talking before the show about, weather change. It's still not perfect weather. And I think you have to consider what it was we got last year in all the places of the country to get to that type of a yield, and what our demand ended up being. The one good thing I think the market has behind it this year that we didn't know last year was corn disappearance over the first 2 quarterly stocks reports has shown to be a record. We have very good data for ethanol, for exports. Our feed and residual number is always the question, but it does suggest that we are actually consuming this corn. And now that we're starting to see some Chinese business, I think there's been a pretty good reason for the rebound. Like you mentioned on the crude oil, I am very surprised the market is not more concerned about that. I know Trump is already talking about how much Iran wanted a deal again yesterday evening. So maybe that's enough for everyone to kind of go back to status quo. That if the U.S. wants peace, that's what's going to happen in the end. I don't know, but I still think there's a couple of things between weather, demand, and that unknown crude oil thing where I want to be kind of skeptical of all of a sudden quick sell-offs, when we still got a lot of year left to discover these things.
Yeah, very good. Jace, interesting price action, from where we started this week to where we're going to be. I know we got WASDE out tomorrow morning. By all accounts, I don't know that anybody's looking for something real earth-shattering there, but at the same time, it's a report. So I guess, what are your thoughts here?
The report, unlikely to be any major changes, I wouldn't think. I mean, not to yield. And to this point, I think they've only changed yield a couple times, and it was obvious they needed to, 2012 being one of them. So unlikely change yield. Acres, like I said, kind of I said after the last report, they put a special note in there where they left a ton of room to adjust acres, where they showed, in my opinion, really low confidence in the number they gave us for the June report. So that always makes anybody nervous. After we went through last year, right, and saw what they did last year at acres. So I don't have an opinion on that one. Just keep that in mind, that it's a wild card for this report. Agree with Dustin. I think farmers selling. Yeah, I think that rally came so quick. It is a surprising stat that Dustin said it was the biggest move we had for the contract. It doesn't seem like it, but I guess from how low we were to where we got to in a short amount of time, almost didn't give time for the farmer to sell. It happened so quick, and then by the time guys were able to look at where they were, it makes sense. It probably made sense for guys to catch up. So I know we did. We caught up with some guys, definitely with some old crop and and some new crop stuff. So I agree with Dustin. I'm looking at these weather models, and there was some chatter on Twitter that the GFS had some rain. Maybe I don't really see it. Seems like maybe the heat dome kind of shifted and maybe had some rain. It looks similar to me. On the drier, warmer side for the next couple weeks. And now if it rains, okay, so it's higher and drier for the next couple weeks. Like the bear case is like, so, we got plenty of moisture to this point. And if it, we start getting some rain in a couple weeks, that's fine, and I agree with that. It's if it continues. And like I said yesterday, who knows? You go look at these weather models and they can't agree past a week, and even their weekly forecast, right? You guys know, I mean, it was supposed to rain today. What the hell happened? So, we've been in a lot of markets like that where it's not supposed to happen. It happens. So it's a big gamble. I don't find these corn at 450 all that exciting when you think about where, these different safety nets are. We were well below them. Which I don't think there's any incentive for a farmer to sell. We got into a price maybe to add to some sales, but like to say, yeah, you got to get super aggressive at 450 because it's going to $4. Yeah, I just don't see it at this point anyway. So,
yeah. What about like $12? $11.90 to $12 new crop beans.
Yeah, there's definitely more risk in beans from a farmer perspective. A lot more unknown. I think where farmers feel more comfortable selling corn is they can rely more on their yield. And I think beans, talk to any, I don't know, are they good? Are they bad? They're small. It doesn't matter if they're small, if they're tall. It seems like nobody ever knows how their beans are going to be. So that's the tricky part about marketing beans. But I think from a price point, yes, these are, pretty good prices and, a lot farther away from where, those kind of safety nets kick in. So.
Yeah. Dustin, interesting story out this morning. I know we've talked a lot about it, but you saw that national corn growers did a study on cost of inputs versus U.S. versus Brazil. And it's been massive headline all morning about, how non-competitive we are relative to what it costs them to grow the crop and everything like that. And I thought that was interesting that this administration, within the farm bill, putting in a fertilizer czar or whatever you want to call it, input czar, right, to monitor these things. It's, I guess, surprising it's taken this long, but at the same time, it is starting to gain some headwind in terms of we're kind of biting our hand off here in terms of how much it costs us to produce these crops. Now, I did notice too within the study that the average corn yield over there in the 100 bushel type range, so they're still pretty far behind genetically on corn, or production wise on corn. I shouldn't say genetically, but production wise on corn. And we're really pretty close on beans. So I thought that was interesting this morning.
Yeah, I mean it's double crop, right? It's you're growing two crops in the same ground within 1 year. I mean, anyone that's successfully been able to grow double crop, beans over wheat, knows how fast that revenue can add up. It's all extra revenue. So I think that's the difference, is that you're able to get two crops in one piece of ground over one calendar year. But there's a variety of other reasons, obviously, too. But infrastructure has vastly improved. I mean, you just look at a chart of that production, and there's no question that we need to find ways to continue to use these things. So E15 would be huge, right? I think the renewable diesel story is huge. We need to continue to incentivize more use cases to keep justifying the direction we've been going on yield production. So
yeah. I'm frustrated with E15 just because the oil lobby. I just feel like we're always going to bang our head against that, and it's like almost like you got to move on. That's kind of where I'm at mentally right now. Think about it. We've been talking about that as a no-brainer layup, and we've gotten nowhere.
I think it's that is still inching along, though. I think that it will be inevitable here soon.
Yeah, better hurry. Especially if we're gonna have the impression that we're gonna grow 180 plus bushel national yield. You got to use this stuff, or none of it's gonna matter.
Well, never let a good crisis go to waste. You have 4 years of negative margins where we're having to, see massive ECAP bridge, MFP payments just to keep farmers afloat. This is the best time to get these things, into use.
Yeah. Very good. Well, that'll put a wrap on today. Let's, as again, like I mentioned earlier, we're going to have WASDE out tomorrow, 11 o'clock Central. We will have a premium video that will release post-report, highlighting any changes that were made and our thoughts certainly after the report. Ways to check that out. Link is in the description. Check out the War Room Report. Access to that content. Also, just a deeper dive into all the things we talk about daily here on the War Room. So give that link a view. Also, portion of those subscription fees goes directly to support the AgYield NextGen Foundation, which of course has awarded our first 5 scholarships to very deserving students here. We're going to honor them here in a couple weeks. So we're very excited about that. Check out the foundation. It's a real good cause there. Tomorrow, Jack will be in, and we will have Fun Fact Friday. Brian's back in the house. So I know it's been a couple weeks because apparently it's illegal to not do to do Fun Fact Friday, not on Friday. So we are going to finally have a Friday that we can do it. So be sure to tune in. That's always a great way to go into the weekend. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we'll talk to you again tomorrow.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content. All for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.